This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel, and today I want to talk about CPI, inflation briefly, and then I'm going to share with you some of my findings on Tyler Jenk's Hyperwave theory. So, Hyperwave theory is essentially the three angles of attack that I use, except it's a much more refined, highly polished, and highly specific set of conditions that produce a hyperwave. So all hyperwaves are bubbles, but not all bubbles or parabolic blow-off tops qualify as hyperwaves. So the interesting thing about this is they are incredibly rare. Tyler Jenks analysed over 75,000 assets and the charts of each one of those assets and only found around 400 hyperwave examples. So that's how rare they are. And the most interesting thing about all of this to me, as I'm going to show you in a bit, is number one, I believe the stock market is currently in a hyperwave, okay, which is pretty interesting. And it also means that we can quantifiably know how to handle the stock market going forward. And I also believe Bitcoin is setting up to enter a hyperwave. And if it can confirm phase 3, it gives an 85% probability we will enter phase 4. So I'm going to show you what all of that means. The implications are that nobody is bullish enough. This is a very specific set of conditions. Like I said, only 400 approximately examples have been found through over 75,000 charts. So if that's what we've got to play, number one, it means we're going way higher than anyone thinks is possible right now. And actually, the funniest thing of all is it means Plan B's model, which most people consider a joke, would likely become the most accurate if we enter a hyperwave. And the other thing it tells us is we have a hard and fast exit system to exit near the top if a hyperwave plays out. We also know the path it will take following the breakdown of that fourth angle. First of all, we've got to touch on CPI, okay? So I have been long tracking CPI. I've been, I think, amongst one of the best at tracking it and correctly getting the direction of the trend. But as of yesterday's print, okay, this was, like I said, color me surprised, okay? So this is absolutely not what I was expecting. This is absolutely not in line with my expectations. Of course, this could be a counter trend wobble, right? It could be. But the thing is, we have to point at a few facts, okay? Number one, we've been expecting on this channel for a long time down, sideways, and down. We'd certainly started to get that, but we've now bounced back up to here. Okay, so maybe that's just a counter trend wobble before we then resume to the downside, maybe, in which case, you know, happy days. We'll have to continue to track this in real time. But there's a few things about this that don't sit right with me. First of all, we saw massive divergence in Trueflation. And we've seen massive divergence like this once before, and I was caught offside by Trueflation once before, and that was back in January, where we also saw Trueflation move really sharply to the downside, and then we actually got a hot CPI print come out in January. Now, at the time, I gave Trueflation the benefit of the doubt because the government had just changed the way the CPI basket was calculated. So I said, well, maybe that's what it is. Maybe they changed the calculation, it threw it all off. And to be fair, going forward, we saw a little bit of a counter trend bounce, a little bit stickier inflation than I had anticipated, but we did ultimately resolve the primary trend and the expectations weren't too far from reality, okay? We just had one or two wobbly prints, and that's okay because like anything, okay, macro data sets also experience counter trend wobbles, so maybe that's what we're dealing with, maybe, okay? But the thing that's quite concerning to me is this is the current readout for Trueflation. So we've bounced, assuming Trueflation is not completely wrong, okay, then we made it all the way down to here, and now since then we've been ticking up massively. So this is going to make it very difficult to not see another hot print or a sticky print at the next CPI readout. Of course, if we get another sticky print at the next CPI readout, having just bounced up here, then, you know, we're probably going to be back in this kind of neighborhood fairly soon, and then that no longer fits with down, sideways, and down, does it? So I'm setting up to be invalidated here. We need to see a couple more prints. I can never just say, well, there's one sticky print, we'll throw the whole thing out the window. You know, the unfortunate thing about this is we only get one print a month and it's going to take some time, right? It's going to take some time before we can actually know for sure how wrong I am, if I'm wrong at all. There is another way to interpret this data, and let me be clear, I'm not trying to sell you anything. You could easily interpret what I'm about to say as confirmation bias or me trying to fit a narrative to fit my expectations, okay? Like, I'm not pushing this on you. I'm not trying to present anything as fact. I'm not trying to sell you on anything. I'm just showing you, one other way of looking at it, and then you get to decide whether you agree with me, whether it's confirmation bias, whether, whatever. You get to make your own decision on this. I'm just showing you another way to look at this. But that is, if we use real-time metrics for shelter, headline inflation drops from 2.6, which is, of course, was reported yesterday, down to 1.3%. And now that would not only fit Trueflation's readout, but it would also fit my expectations. Now, I know there's going to be some people that feel uncomfortable with what I'm saying. Like I said, that's fine. I'm not trying to sell you on anything. If you think this is confirmation bias or fitting data to my narrative, that's absolutely your prerogative and your right to believe that. It would also drop core inflation from 3.3 to 1.76, and official BLS shelter of 4.9 would come down to about 1.3%, which would actually give us negative 0.4% month over month. So we would actually be deflationary month over month. Again, that number of around 1.3 fits quite nicely with Trueflation's readout. So I do wonder if what we've got is a real world CPI print, which is of course trending down towards where it's supposed to be and towards expectations, and instead the Fed just doesn't quite want to let on about this yet. So again, I'm not trying to convince you of that. When we look at the CME for the rate cut probabilities at December's meeting, okay, the CME seems to agree with me. It doesn't seem to think that inflation is sticky, okay, because it is not repricing in favor of remaining paused. It's not putting hikes on the table. If we go to compare, 1 week ago, we were down at 60%, 66% probability of seeing a 25 basis point cut. And following the print, okay, we've popped up to 83% just under. So according to the CME, okay, they don't think inflation is sticky. They don't think the rate cut probabilities are overly restrictive. They don't think that at all. What they think is, okay, probably this data is not quite right as it's being presented. This is possibly closer to the mark and shelter's lagging and causing it, and thus we do actually need to see further cuts. So again, not trying to sell you. You make your own decision there. Objectively speaking, this is not what I expected to see, okay? But it's not the first time we've had a wobbly print. And again, unfortunately, all we can really do is give it another couple of prints to play out and see if we actually get a true trend change. So like I said, if this becomes this, okay, then Camel is clearly wrong. Absolutely. But we can't really tell until we get a breakout and a true directional change, okay? If what we see is something like this, 1 or 2 prints and then a rollover, wholly speaking, I don't think I would have been too far wrong. So we can't tell until after the fact, but it is what it is. We will continue to track it in real time. I'll continue to try to stay as objective as possible. And so now I want to talk about hyperwave theory, because hyperwave theory is incredibly interesting to me. All hyperwaves are bubbles, but not all bubbles are hyperwaves. Like I said at the beginning, hyperwaves are very, very specific in terms of their structure and how they behave. If Bitcoin is about to stage a hyperwave, it would probably look something akin to this, okay? So that would mean this whole thing I've drawn here, this first part of the yellow squiggle, would be in line with this fractal, okay? So a bit more of a push, a 60-day cycle low that of course coincides with the DT inauguration. And then we should, in theory, if a hyperwave is gonna play out, move into this fourth angle, which would be Camel's third and final blow off top angle. And then the implications of hyperwave are that the price will return to at least the stage 1 base, if not move below it. Now, there's an interesting nuance to this, because out of all of the examples, they all return at least to the phase 1, okay? All of them, except for Bitcoin. So I'll show you an example of that in a minute. Here is the hyperwave structure. It is very, very specific. We have a phase 1, which is a range, okay? At some point, this breaks out and enters around a 45-degree advance. Many, many, many markets will never leave phase 2, okay? They will break down from phase 2 and then enter phase 1 again or whatever. It's incredibly rare for markets to even enter phase 3. But what's interesting about phase 3 is by the time phase 3 has been established on the weekly time frame, there is an 85% probability phase 4 will occur. Which means if I'm right about Bitcoin entering phase 3, we, needless to say, have an 85% probability phase 4 is coming. Something else that's really interesting to me about these is part of Tyler Jenk's definitions for hyperwaves, right? Part of his requirements or conditions were that these only occur during major economic shifts. We had an example of this in the Japanese stock market. The Japanese stock market underwent a hyperwave, and it was because something major was happening under the hood. That major economic shift for the Japanese stock market to complete a hyperwave was that the Japanese economy was climbing the ranks and on its way to challenge the US economy for being the largest. Now, it ended up falling slightly short of that. It ended up only making it to the number 2 spot by the time it got to this hyperwave, but that was a significant and major economic shift. that occurred. Okay, we also saw the same thing in gold and silver. Gold and silver have undergone hyperwaves before, and this hyperwave was induced in gold, this is the gold chart right here, okay, by a massive change in economic conditions. So here we get the phase one lead-in, okay, which leads to a breakout. What happened right around here? In 1971, Nixon took the dollar off of the gold standard. We went from having fiat currency that was backed by gold, which carries inherent value and is difficult to inflate, to having a major economic shift whereby they took the dollar off the gold standard and they could now print infinite amounts, infinite units of currency. And then notice what happens here, okay? Now, according to the rules, we use the lowest weekly low close to set the trend line for angle 2, okay? Then we get an acceleration into angle 3, okay, as you can see right here, before ultimately wave 4 in the hyperwave system is set and we get this huge expansive blow off top move. So the other cool thing about hyperwave theory is we know where to sell, okay? We sell on a weekly candle close below this fourth blow off top angle, and as you can see, we then get phase 5, a counter trend bounce, which we know will form a lower high. It never goes on to produce a higher high and then rolls over, which means even if you miss this for some reason, okay, you can have full confidence that a counter trend bounce has come in to let you out here. And this is also a very nice area to short the market on a high probability setup. And all the while that weekly trend on the fourth angle is not broken, then it keeps you in the trade. Whereas we can kind of see this now with Bitcoin, right? Everyone's looking at Bitcoin and going, oh, it's extended, it's extended, it's extended. As I'm going to show you in a minute, we might only be at the early stages of this phase 3. Okay, phase 4 may well be to come. I also wanted to show you a very, very nice example with Bitcoin from back in 2017 of a hyperwave. Okay, so we can draw that again, big lead in phase 1, which is flat. Okay, then we get a breakout from phase 1 to phase 2, as you can see here. Okay, then it accelerates from phase 2 into phase 3. And then of course we get the final blow off top move. And so this is a very, very clean example of a textbook hyperwave. Once again, notice how the whole way through here, everyone was saying this thing's overextended, blah, blah, blah. But if you knew the hyperwave structure, then you have hard invalidations on the trend line breaks, and all the while the trend is not broken, you can stay on this thing until all the way up here. You could have got out at 17,300, that's when you would have been taken out of the system, and you missed the top by a few K, okay, which is essentially in this game flawless. No one is going to sell the exact top. So pretty wild, okay? And then, as I was saying earlier, wave 4, once it completes, should ultimately resolve to a sharp sell-off, okay? We see that here. This would be 5, 6, and then 7 comes down. 5, 6, and 7 comes down. Now, Bitcoin is very unique because it should have been targeting 1K back at this phase 1 level, but for some reason, it didn't do it. Now, this is completely unique to Bitcoin. I have my own theory for this, and potentially it's because of the miner floor price and things like that, and the miners defending the network. But outside of Bitcoin, okay, all of these hyperwaves that break down go through 5, 6, and 7 always resolves to that phase 1 level or below it, which is pretty cool. Now, I also think when I was playing around with this, we're going to see the stock market violate this fourth angle pretty soon. Okay, so I'm going to show you that, and then I'm going to show you at the hard right edge why I believe Bitcoin is currently experiencing a hyperwave of its own and nobody is bullish enough. So let's do the stock market first. Anyone that's familiar with this channel will have seen these 3 angles of attack. This is my own crude version that I kind of just developed from experience in the market and getting sick of watching parabolic moves unfold and either selling too early or selling too late. So I figured out pretty early on in my career, because I started with penny stocks, and lots of those undergo parabolic blow off tops. So by the time I found Bitcoin, I had already seen and traded hundreds of parabolas before. Now remember, all hyperwaves are parabolas, but not all parabolas are hyperwaves. So there's a big distinction here. Anyway, if you like the 3 angles of attack, okay, this works for me. Okay, it keeps us on the trend until this eventually breaks. And when it does, as I've said a million times, in my experience, it breaks, hits the second angle, and then breaks again. And the first angle becomes the minimum target. Now, if it's a hyperwave, of course, that implies we come all the way back down to the lead-in phase. So let me show you this once more, and just why this is so incredible based on everything I've shown you so far. So I want to show you this really quickly, okay? This is the SPX. Now, I don't want to mess up my own TA, so I'm going to leave this here, but the reason I want to point this out, okay, is because during this dot-com bubble burst back in 2000, okay, we had this bear market, but here's the key point. We underwent a big phase 1 base, okay? This was a long time trading where we could not get above the highs from the dot-com bubble until all the way here. Okay, so with that in mind, now when I pull up a clean chart, I'm going to use the US 500 for this. Notice that the data doesn't go all the way back that far. Okay, but this is that GFC, that big crash, okay? And again, that was the level that goes all the way back to the dot-com bubble. This is phase 1 in the hyperwave theory. It would look something akin to this, right? So now we've got all the data, right? Here's our phase 1. Now, look what happens here And this really blew my mind, okay? So here's phase 1 and here's phase 2. Now we have to use the weekly candle bodies, okay? We don't count the wicks. So if I zoom in here, here's the body, okay? The lowest candle body on the weekly chart. So I have to connect it to that. And that becomes where we set phase 2. Then we do the same thing again, connect phase 3 using the weekly candle body closes, the lowest weekly candle body closes. And now you can probably see what comes next, okay? We apparently are in phase 4 of a hyperwave. And again, this needs to be set using the lowest weekly candle body closes. So now when we zoom out, the US stock market is, as far as I can tell, well into a phase 4 of the hyperwave theory. Now, remember earlier on I was saying, the interesting thing about hyperwaves is they have to occur on major economic shift, okay? So some of you probably can see what I'm about to say already. What happened in here that caused the start of this hyperwave, okay? After the GFC, the big unwind, the massive deleveraging, what happened here? It was the birth of QE and outright Fed balance sheet expansion, okay? Which is majorly different to anything we'd seen before that. The Fed is now able to print money and use it to buy the stock market and hold the stocks on its balance sheet. Okay, that is a major economic shift, similar to how when I showed you the gold example, we took the gold backing off of the dollar and gave them the ability to just inflate the currency at will. Okay, major economic shifts cause hyperwaves. So we have the conditions required to see this become a hyperwave. As far as I can tell, okay, that's about a 45-degree angle, that's about a 60-degree angle, and as you can see, we have now started to advance beyond into a phase 4 of this hyperwave. So what does this tell us? Well, it tells us a few things, okay? Number one, it tells us we are more than capable and perfectly reasonable and rational to stay long and strong the stock market, all the while this weekly trend line is not violated to the downside. Now, if it was to violate immediately on this current weekly candle, that would be about a 5.5% correction. Okay, a daily candle close below that might be about a 6% correction. And a lot of people there will be screaming buy the dip, just like they were screaming buy the dip here. But so long as it's not just a wick that resolves to the upside, and so long as it's a weekly candle body close below this trend line, that tells us this hyperwave has completed. What else does that imply? Of course, that implies that 5, 6, and 7 are next, with 7 targeting phase 1. Now, here's why all of this stuff started to really give me the chills and make me think we're well on the path to getting all of this right. Phase 6 would be a sharp drop, okay? Then we know that will resolve to a counter trend bounce that forms a lower high, okay? Enabling a nice short opportunity and anyone that didn't get out for whatever reason to have a second shot at getting out. But then this would have to resolve all the way down to, at a minimum, a touch of phase 1, if not below it. Now, from the current level, that represents about a 78, 77% drop top to bottom. That's from where we are now. If this thing continues to squeeze higher for a little while longer, okay, let's say it makes it to 6,400, then we start to have to entertain a minimum drop of 80%. And in many of these hyperwaves, the phase 7 completion, this final leg down here, okay, actually undercuts the phase 1 market. So that would be in north of 80% decline, okay? That is absolutely wild, but that's also very, very fitting with the base case hypothesis of the channel. There's many, many thumbnails I've shown with a parabolic blow off top on the weekend's deep dive with an 80% red down arrow. And a lot of people said this was insane, but I had other reasons for thinking this is what is likely at play. Largely it's because it's a big parabolic blow off tops at the end of multi-decade cycles. You know, you've seen the work, right? And if you haven't, you can always go back and check it. But I say this not to doom monger. I say this because my research and work has essentially led me to this conclusion. And then I've found somebody who has a much more polished and refined system, quantifiable data that points at the exact same thing. This is absolutely wild. And I also speculate that this is a controlled demolition to ultimately bring the entire system down and usher in these CBDCs, right? Now, whether or not that works, that's a whole different kettle of fish. That's a whole different conversation for a whole nother day. For now, I don't even want to entertain downside ideas. I don't even want to entertain downside scenarios until we have those third and final angle violations, or at least the fourth in the hyperwave, which is essentially 3 angles because the first one is flat, right? So first, second, third, when this thing breaks down eventually, and it could go on for a long, long time, okay, for all we know. I mean, David Hunter's got a target, I think his is the highest, of 7,500. Which would take us all the way out to, if it follows this line, about January or February of 2026, right? So that would be all of the people calling for early tops wrong. That would be, you know, that would be David Hunter, because he's calling for it, I think, in a matter of, I think he's calling for it by Q1 of next year. So yeah, I mean, it would take a lot longer than people realize. But again, when we zoom out, this would just be a textbook hyperwave that looks exactly like this, right? And you can see the size difference of this wave compared to the gap between here and here, right? So again, the interesting thing about this is my 3 angles is really quite speculative, okay? But the hyperwave system says that we know exactly what's going to happen in all cases apart from Bitcoin. Bitcoin is the only one out of those 400 that didn't behave this way. And what that means is we can quantify, like I said, a weekly candle close below this line, wherever it occurs, tells us with 100% certainty we have seen the top. 100% certainty we've seen the top. It also tells us we're going to get a very nasty, sharp, violent plunge, a counter trend bounce that resolves to a lower high, and then we are going to be targeting a minimum of all the way down here at phase 1. Okay, that's why hyperwaves are so polished and pristine. I absolutely believe this current setup meets the requirement of a hyperwave, and I absolutely believe that when eventually this thing does break down, okay, that short entry is going to be cool on the way down. I think that, you know, there's going to be nasty recessions and all of that stuff. It all fits with what I've been presenting over and over again on this channel. So then the question becomes, can Bitcoin also undergo a hyperwave, right? Has a major macroeconomic shift occurred that we can say, yes, we have seen a major shift occur that would qualify the onset of a hyperwave, okay? Or is this just going to be a parabolic blow off top and it's not going to qualify as a hyperwave, right? Maybe this is just going to be 3 angles that break down. Maybe we're not going to enter phase 4, okay? But I believe this does meet the requirements for a hyperwave. And like I said, once we get into phase 3, which I believe is well and truly established here, and I believe will be confirmed with that daily cycle low in around 45 days time, then I think we're going to see phase 4 come in. So I make the case that the major macroeconomic shift we have seen here for Bitcoin is the spot Bitcoin ETFs, institutional adoption, and we are now even, by the time we get to this next 60-day cycle low shakeout, okay, we are possibly going to see the first ever pro-Bitcoin president that is potentially going to start to build a strategic Bitcoin reserve. Now, I by no means, this is not Moonboy talk, okay? I'm just looking at what I'm seeing in front of me and saying that to me, I think qualifies as a major economic shift. That's what I think. I think what a lot of people would get wrong about this hyperwave is if, let's say, DT gets inaugurated in that 60-day cycle low, we enter phase 4, everyone is going to think it's a paradigm shift. Everyone is going to be talking about they're building a strategic reserve, it's going up only forever, it's going to the multiple millions of coin, there's never going to be another bear market, there's never going to be another 4-year cycle, there's going to be all these narratives out there that keep people long and strong way later than they should be, okay? But if this is the correct structure, if this is what we're going to experience, if we are going to move from phase 3 to phase 4, and again, according to hyperwave theory, 85% of phase 3s become phase 4, particularly when we've got a backdrop of major economic shift, for this phase 4 angle to continue into October, and for this to be a standard, normal, and to be expected right translated cycle that tops in around October or November of 2025, okay, that gives us a price, an exit price on a weekly candle close below this trend line, okay, of around 400k. And this hyperwave might actually end up looking something akin to this, okay? And then we get that 5, 6, and 7 on the way back down. I told you, no one is bullish enough. Let's be clear. I don't think we're going to make it all the way to October as everyone expects. I think that's far too crowded. I think the market always front runs the herd. And I think the herd is expecting a normal to be expected cycle that tops in October and undergoes a 12-month bear market. Something else, okay, if this is a real hyperwave, whilst I think 400k would be achievable, it just seems a little bit too high for me personally, okay? That's what I think. Could we see something like this up to 180, 250k, okay? And that still be a pretty insane hyperwave? Yeah, I think so. Now, a lot of people were asking me, well, hyperwave theory, the yellow squiggle suggests we come all the way back down to here at 25k. Is that why I'm calling the bottom to be? No, let's be clear. This is just hyperwave theory, like I said a million times, tells us once it breaks, we target this as the minimum, phase 1 as the minimum. Now, I don't think it goes that low. And as I said a million times already, Bitcoin is the only market that has ever undergone a hyperwave and not finished at the phase 1 target. So I think we could probably see the similar thing again. I think we could probably get something like this occur. But something else that's important to point out here, according to hyperwave theory, is hyperwaves are not good. Okay, they're not a good thing. They actually cause so much chaos that the net prosperity is lower when they're over than before they began. Okay, so all of this seems like a very prosperous time. Lots of people are making good money. You know, the stock market might be booming if it's this that's going on here. Okay, but the net effect is once this eventually breaks down and triggers the sell signal by giving us a weekly candle close below, okay, it has a shock, a counter trend bounce to lower high, and then it targets a minimum of phase one. The net prosperity here is significantly worse than it was before we entered phase one. So these are not positive things. And once more, okay, for the stock market, that kind of makes sense because I believe this is a controlled demolition. They're going to use it to usher in deflationary crashes, maintain dollar dominance, dollar milkshake theory, all of that stuff. And then hopefully for them, they're going to try to usher in CBDCs, right? But what does it mean for Bitcoin? Well, it means that this Bitcoin space will be so destroyed following this that it's going to be worse. The damage should be worse than before the BlackRock and the ETF and the institutions and the strategic reserves and all of that came to be. And what I thought was very, very interesting that Tyler Jenks said, was that if Bitcoin was to enter another one of these hyperwaves, okay, it might actually end up being its own worst enemy. Because if this is all to occur, it might actually speak to, by the time we get here and we have this big breakdown, this big meltdown, everyone will be expecting, including me, okay, that we get record QE, okay, down here, Fed balance sheet expansion, 4-year cycle low in 2026, and then we go off to the multiple millions per coin. He was suggesting that what we actually might see here is Bitcoin not truly recover, and that would be caused by the feds and the governments choosing to go back to a gold standard. If they choose to go back to a gold standard, there's no real requirement anymore to have Bitcoin, okay, other than we go all the way back to it's another asset class that people might want to hold, right? People like you and I might always want to hold Bitcoin. But in the scheme of things, according to hyperwave theory, okay, we've undergone a paradigm shift. We're probably going to have this huge blow off top move. And then there's a very good chance that Bitcoin does not get chosen to be part of the strategic reserve or the world reserve asset, or we don't go to a Bitcoin backed currency. And if that's the case, then we might end up at the bottom of this bear market being in worse shape than when we were back here, coming off the back of the FTX collapse and all those other liquidations that occurred. Okay, now again, this is not me saying this. This is what hyperwave theory suggests. Okay, and of course, we could always have that situation where we don't come back to phase one. Okay, we don't make it anywhere close to that. And what we do is enter another hyperwave straight out of here. And that would probably speak to the situation where they don't go to a gold standard and instead they go to a Bitcoin standard or a basket in which Bitcoin is included. So it's all still very much on the table. I think in summary, hyperwaves are incredibly rare. They occur on macroeconomic shift, such as what we've seen in the stock market when we invented QE and Fed balance sheet expansion. Okay, we are clearly quite late in this, and the yellow squiggle, whether it plays out from where I've got it drawn here or higher up, at some point is going to play out. And according to hyperwave theory, gives us a minimum target of phase one. It also tells us that it is more than reasonable to remain long and strong and bullish up until we close a weekly candle body below this phase 4 hyperwave line. And it also tells us that all of my bearish implications, okay, me being long, strong and bearish is absolutely right, since my whole idea that we are going to crash around 70 to 80% once this eventually violates is, according to hyperwave theory, very, very, very realistic. Not only realistic, it is the most probable outcome. For Bitcoin, in a sea of people looking at these candles and saying, well, it's overextended, it's overbought, it's a bear trap, bro, right? It's not impulsive, I don't care whatever the narrative is. Okay, as far as I can tell, we are in phase 3. And like I said, we've got a 60-day cycle low coming up. If that low holds phase 3 and accelerates higher, we have a confirmed phase 4. And then the whole thing is applicable to Bitcoin, just like I've said with the stock market. The one caveat for Bitcoin is that the downside target may not come all the way back down to that 25k level, because we've seen Bitcoin be the only asset class that ever does this stuff before. Back here, when it never made that 1k target, it actually only made it as low as about 3k. Similarly for Bitcoin, if you want to know how to sell the top or when to sell the top, and we do indeed get a fourth and final angle, the third angle in Camel's system or the fourth angle in the hyperwave system, a weekly candle close below this line is, according to hyperwave theory, 100% certain that it will not move up after that to make a higher high. There could, of course, be a big violent bounce. Ultimately, again, with Bitcoin, it is absolutely reasonable to remain long and strong until we close a weekly candle below the trend line. Have a fantastic week, and I'm your boy Camel. Until next time, cheers, bye.
Camel Finance, he's the man to see, rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame, sticking to his guns in his money game. He's a